Good ECB day, Eagles. Everyone ready to soar over Draghi's word at the press conference? I'm Dale Pinkert. This is me. This is FACE, ForexAnalytix Community Experience. That's for new viewers at investing.com. Welcome. Should be an exciting day. Also have a great interview with a Canadian female trader. Her handle is Airplane Janes. She's a pilot, so we'll get some aerial views of how she's trading this monster bull market in equities. You're going to want to hear Jane. And we have a lot of things going on here with the dollar getting creamed. I know here at ForexAnalytix we gave some levels that are starting to get very close to. You know, I teach it's not just the price, it's how it gets to the price. So, you know, it's the action, what's the momentum going into a level, is it diverging, is it confirming? So we'll take a look at the dollar index in a bit. Just want to give people a brief preview of our traffic light page, and you don't want to run red lights. So you have all kinds of basic technical analysis, Elliott wave, we have them all. Okay, so here's your basic technical. And we're entering some levels. You get all the analysis on this side. If you're a fan of harmonics, you get the harmonic look on Euro. See what Nick's looking for here. Give you a freebie. Come on. There we go. 25, so we're not that far away from that target that you posted a while ago. As you could tell, the big move that we had this week did not surprise Nicola Duke. So let's take a look at some live action here, and I want to turn it over to Blake, and he's much better than me at reading fundamentals on central bank days. So I'll just give you a quick review of a few things I'm looking at here. Okay, first a dollar. Okay, so we've been talking 88.65, 88.50 for weeks. In fact, I did an interview on December 20th. I used Steve Volge's chart. It showed a lot of confluence at 88.65. Grega also had a number down there. And I can't really do anything here. We have a little divergence between these two lows, right? But the reading is 20 down here. So it's going to be interesting to see if we head towards those targets. After Draghi, if he's unsuccessful in talking the euro down, since the euro is the biggest percentage or proportion of the Dixie, be interesting to see where the RSI, if it could hold above 30, that's going to give me a reason. So, you know, it's not just getting to a price, as I was saying, it's how it gets to a price. It's better if it grinds to an objective than free falls to an objective, because then your objective most likely isn't the right one. So you want to see momentum begin to slow before you try and catch a reversal of what's been quite a dramatic decline. And if you look back at our videos, we were dollar bears from a long time ago, especially once we took out the 94.20 level. And that's all we could do basically was rally. A lot of guys were looking for 97. And we turned pretty negative up there at 94.20, looking for the lows. It was always my contention that we would take out the low of the move at 90. So here we are on the 4-hour chart. Still, the readings are too much momentum to the downside. So I believe normally what happens is you'll get your first divergences on your shorter time frames. So I'll expect something on a weekly. And then, on a 1-hour chart, and then the 4. So here we are. It's early for me. Let's see what Draghi does. Just want to show you, you look at the individual levels, and what I would do is I'd look for relative weakness. Okay, so here again in the euro, that's a pretty high reading, 79. You know, you might get a break. But it's not it probably won't be the final high. You could get a high, but not the high. Everyone with me on that? You could have a low, but not the low. You know, it's just part of a trending process that occurs a lot. But you look at this RSI level and then you compare it to something like the Aussie. The pound, of course, is a strength. Looks like we got close to 90 up here, 86, 87, pretty close. So the Aussie, to me, is showing more divergence. As you can see, we just got above 70. But when I look at the one hour chart here, guys, I wouldn't even take a shot at Aussie yet. I teach a 3-drive formation, so this is 1 to me. All right, confirmed. This is 2, your first non-confirmation, and I'd like to see one more high above 81.20, and the RSI conditions would be ripe if we stay under 70. Everyone with me? You don't have to agree with me. I just want to make sure you're getting it, okay? Because we want you to begin to think on your own. You know, we're all planning to be retired on some tropical island in a few years, and you can't be lazy if you're a self-directed trader. You have to spend a lot of time. You can't learn experience. It only comes with the passing of time. There is no secret to FX trading, stock trading, futures trading, any kind of trading. It's just hard work and persistence, and you have to put in the screen time. So with that being said, I think we're getting close to that in the dollar. I'm still on alert, even though the crude continued to explode to the upside. I thought we might stall around here, around 65.5. As you can see, I don't have nothing yet here, but it's getting close. The COT report, you know, people have been following it. They've been trying to short it all the way up, haven't tried it yet. Was looking for another push to the upside. On some larger time frames, the 4-hour, you don't have any divergence. Let's just check the daily. A little bit, but the readings are getting pretty big. We're getting close, so we're getting close. And I think it could be quite a dramatic one. I mean, even back to the breakouts, 56. So I'm starting to stalk crude. It's just not ready. My work says I can't do it yet. And we don't want to have FOMO. So almost every bad trade I take, in fact, I did something in the TZA, it's an ETF on Russell, and I wasn't even patient waiting for what I finally got yesterday. Since I'm bringing it up, the Russell put in a key reversal. I know all the markets are up again. So, but the relative weakness definitely seems to be the Russell. You know, we made a new high marginally. This is pretty classic divergence up here. See, yesterday's high was under 70. So actually the Russell and the NASDAQ are the preferred shorts for correction. Looks like a rising wedge to me. So, you know, you may probe it. Here's a key reversal that didn't work. So people are probably going, oh, the market's up. This key reversal will be negated just like every other one. This was not a key. This was a key. This is a key. So I don't know, maybe it's going to take 3 drives. But anyway, if I look at it on a little longer term basis, maybe we're looking at the second drive here. But it looks like a wedge to me. And actually a weak dollar is not good, hurts the Russell more, and higher interest rates hurt domestic companies more. Multinationals love a weak dollar, but getting financing as a small cap company is not as easy as it is for some of these blue chips that all they have to do is float bonds, and they have so much cash they're buying back stock. So higher interest rates are more debilitating for this sector. So I'm looking forward to a great session. You know, we're a team here, and I've been in a lot of rooms, and this is the best team I've ever been part of. So I'm going to hand it over to Blake Morrill. I interviewed Blake on FX Street, Nicola Duke on FX Street, Steve Volge on FX Street, Greg Horvat, and Greg is going to be with us today, I believe, on FX Street. So I knew all of these people before I joined the team, and it's the strongest on the net. You're not going to find a better free room for content and actionable ideas anywhere. If you do, let me know. I want to check them out. So Blake, how are you today, partner?
Hey, good morning, Dale. Dang it,
Hey,
I keep
buddy.
doing that.
What?
I share my entire desktop. I want to I want to focus on the chart. And you guys can see all that crap, and then it's like, man, I don't know if you guys see all the crap
I didn't see anything, really.
I showed all 6 monitors on this.
Just your bank account balance, that's all.
It is not on there. I very, very rarely check it. Look, today's going to be a busy day. Now, a lot of you guys and gals have been listening to me for north of 10 years. You know, you used to listen to me at the Wise Trade webinars. And
now that's patience and loyalty.
You know, I'll tell you, a lot of these guys and gals have been listening to me every single morning for close to 15 years. And we have a big event. And for those of you guys and gals that are normal listeners, when we have a big, what usually happens before a big event, and by the way, the ECB press conference is the main event for the week. It's coming up in 20 minutes. That's why I have to be really quick about this. So I'm going to ask you guys that question. What usually happens before a big event? Anybody? Who's got an answer? Scott, you got it? Catherine, you got it? Ziggy, you got it? Just a few people, and just a few people really got the answer that I was looking for, and a lot of you guys, even though it's been a while since we talked about this subject. For a big news event, we go mid-range. Amanda, you got it. Of course you got it, Amanda. We go mid-range. Now, mid-range, if you look at the euro dollar, you go mid-range. Well, what's mid-range? I mean, is it between, the recent lows and the hourly charts at 123.80 and the high at 124.60? Is that mid-range or 124? We're not really mid-range. That's not exactly what I mean for today. Today, mid-range means between two key levels. I'm looking at two critical levels this week, today, here in the next, half hour, 45 minutes, hour and a half, whatever. I'm looking at 123 and 125. Now, let's talk about this for a moment. First and foremost, universally, every report I've read this morning, everybody out there, and this spawns into last night, everybody pretty much agrees. There's not a whole lot Mario Draghi can do to stem oh man, I've got elevator music. We're going into the ECB press conference over at my office, and I'm on speaker, so I have to turn that down while I'm talking because I got to leave here in just a few minutes, in about 15 minutes. Anyway, can you hear that elevator music, by the way, Dale? Can you hear it? It's pretty groovy.
I can hear it.
Yeah, that's groovy. Anyway, that's elevator music waiting for the ECB press conferences. We're piped in right into the conference, which we don't have sound delay like if you're listening to NBC, Bloomberg, TV, or just getting it on Twitter. I'm gonna hear these comments for you before most people, but within a few seconds. And it's important for what I'm trying to do. But I'm laying you guys out my master plan right now. So everybody universally expects that the euro dollar is not going to, any type of sell-off is going to be well supported. And I don't disagree. And if you look at what the euro has done, you might go, oh my God, look at the euro, it's so strong. Oh, look at the euro, it's it's breaking out. But let me ask you this: is it a dollar story or a euro story? It's a dollar story. You could look at any dollar pair and go, holy crap, well, the dollar's just been getting killed. Why? Well, there's a universal chorus amongst Trump cabinet members and administration members that they support a weaker dollar. They're not pushing back on it. Mnuchin was out this morning in Davos. I was up when he was speaking this morning at 3 o'clock in the morning time. He didn't walk back any of those comments. He's very much supporting a weaker dollar currently. So this dollar weakness that we're seeing, it's dollar weakness. It's for the euro US dollar strength that we're seeing. It's dollar weakness all the way around. It has nothing to do with the euro. Well, maybe a little bit to do with the euro, but does it? Here's the euro pound. Well, that currency is weak. Here's the euro yen. Well, that currency is not going anywhere. Excuse me. Here's the euro Aussie. Well, the euro Aussie isn't going up. Here's the euro Canadian. The euro Canadian, I mean, it's drifting higher. The Canadian's been relatively weak because of the NAFTA, talks. Euro peso, or it's sitting there. Here's the euro New Zealand sitting there. Here's the euro Swiss. Now the euro Swiss has been relatively strong. I haven't looked at this in a while, but regardless, you guys can see that it's not necessarily a euro story. It's a dollar story right now. So if you're looking at the euro dollar, thinking, oh my God, it's way bought and there's no way it could go higher, I disagree. I don't think Mario Draghi has the ability to really talk down the euro too much. Is he going to tell us that the Eurozone economy is doing horribly? He can't. He'd be lying. Is he going to tell us that he's not going to raise rates at the end of this year, at the beginning of 2019, after he ends quantitative easing in September? No, he's not, because he's got to. Inflation is starting to ramp up and the economy is picking up in the Eurozone. So he can't really, other than try to talk down the euro a little bit, I think any euro dip that you see is going to be bought. That's why I think any dip towards 123, 123 and a quarter, 122.80, 123, 123.40, somewhere down there, if he tries to mouth down, with his rhetoric, try to talk down the euro, I think it's going to get scooped up. I think people are going to go, yeah, that's great, but look, you can't do anything, so the euro is going to continue to rally. Now, and I think that's universal. That's not just me. That's everybody. And I wholeheartedly agree. And if we get below like this green line here, then things are going to get a little dicey, and maybe that's because of positioning. And I do worry about positioning and sentiment in the euro being extreme on both fronts. That does concern me. So even if we do for some reason break down, people will look at the euro and say, well, he tried to talk down the euro, and positioning and sentiment was too extreme, so it's going to come down anyway. And great, it might come down to 120, 150, and then you'd be a buyer down there. I'm just telling you that I think longer term the trend and the macro trend and the technical trends are very much in place. So I don't think there's a whole lot he can do. Just the question is, can we hold this 123 level? I say 123 loosely, 123 level. Okay, now the other question is, because you might be listening to me going, well, hell, Blake, I'll just buy the euro because it's going up. Well, you can do that if you want. We might be able to get a better price in a little bit, but I'm worried about the 38% retracement of the 2000. Now this is pre-financial crisis highs of 160 to the low, new float euro low of 103 and change. We're at the 38% retracement if we get to 125 and change. So when I say that we're mid-range, and by the way, I should mention that this is a little worrisome, because if you look at technical levels on all sorts of measurements, but it doesn't matter really what technical indicator you're using, we are getting stretched. So I think when or if we get to this 125 and change, might be a little bit of a struggle. That's why I think that I say we're mid-range. We're mid-range between the playable range of today. I think the playable range of today is between here and here. Okay, so What do you do right now? We're smack dab in the middle. Well, in my view, there isn't a whole lot to do. What am I going to do right now? Short the euro in anticipation of 123 move, and then get it shoved on my rear end after Draghi speaks and he doesn't say anything dovish? No, I'm not going to do that. Or am I going to take a long in the euro dollar, and then of course, as soon as I get long, he can try to talk on the euro, and it's going to go to 123 and then bounce. So for me, I'm pulling the extremes of what I see these ranges is around 125 to 123, and unless we see one of those extremes, I'm probably not going to do anything today. Now, realistically, I think we will see one of those extremes today. I just don't know which one's coming first. So that is master plan. Okay, I'm out. I'll talk to you guys later. Hope you guys have a great trading session. I'm just kidding. I got here. I'll be able to talk for a few minutes. I'm just joking about all that. But if you guys want to know my master plan, that is my master plan on how I'm dealing with the euro. That does that mean I'm going to go get long or short? Well, it depends. What the price action is from here. But I hope what I just had said make a lot of sense. And I think that if you're long, you'll find out that you're wrong near term if we get below this green line. If we get below this green line, we get, because you have to imagine this is like the breakout point here, and we get below 123 and change. We're probably going to be, retesting some of the bigger levels here, and which would be down at 121 and change. But hopefully that all made sense. Do you guys or else that are listening in have any questions about any of this? Craig says maybe a butterfly. Harmonic pattern. I don't know. I don't see any. I don't see what you might be referencing at this point. Now, a couple other things. The dollar yen. I have to point out the dollar yen. Regardless of the stock market strength, the dollar yen has been very, very weak. This is going to get very concerning and this chart has been drawn like this for, I want to say, at least 6 months, if not a year. So if you've been listening to this webinar for the last year or less, you've seen this chart. Okay, this is a weekly chart of the dollar yen, and I got a lot of flack when I was shorting the dollar yen up at 113. Okay, but if you think I'm buying the dollar yen when it gets down to 108, I told you back when it was happening, if we got down to 108, I would buy it depending on the situation. Here's where I have my biggest issue with the dollar yen and the current structure of all yen pairs. All right, we are looking increasingly like we're going to a trade war. Donald Trump is speaking tomorrow morning in Davos. He's going to be speaking early. I don't know what that timeline looks like, but I can only imagine what he's going to say. And he's probably going to be tough on trade. And the chances of a repatriation back to the yen from risk aversion standpoint, in my opinion, is quite high at this point. So if we break through 108 in the dollar yen, which has been unbelievably heavy, the yen has been very, very strong. The dollar yen has been unbelievably heavy despite the rise in yields, despite the rise in stocks. If stocks come under any type of duress, we are going to break through this 107.50, and we're probably going to trade closer to 100 yen in the coming week or coming months ahead. So I'm really, I told you once we got down, I'd assess the situation. This is, couple 2, 3, 4 months back. I said if we get back down to 108, I'll assess the situation and see if I'm willing to buy. But we haven't even cracked in stocks. And if bonds go bid, yields come down, dollar yen's going to crashing down. So guys, I'm telling you, with yen, it makes me extremely nervous. This yen strength, unprecedented yen strength that we're seeing despite rise in yields and and strengthen stocks. And I can say the same thing for, you look at euro yen. The euro yen's not following, bond yields here in the U.S. and they're not following bond yields higher in Germany. They're not. It's not following equity markets. Pound yen has made a little bit of a rally because the pound's been out of control. The AUD, New Zealand yen, Canadian yen, they're not going anywhere, and that's truly a big concern for anybody who is bearish yen. That means you're bullish any of these yen pairs. You've got to start being very concerned. And
Blake, you could have been an attorney, because I love the way you build cases for what you think is going to happen, and you point out one piece of evidence on top of another that really crystallizes people. It's not just, it bounced off a line. Okay, so I really enjoy and I really learn, when you build the case, and perhaps I'm looking at it in the same way, actually builds my conviction on the trade. So I'm just saying you would have been a great lawyer too, buddy.
Actually, I can't argue points that well, but I guess in FX I might be able to.
No one does it better, man.
Thank you. Well, hey, I've got to leave. Steve, I'm assuming you're here.
You're assuming correctly, Blake. By the way, I've started wondering here. Dale should have been a journalist or an author. You should have been a lawyer. What are we doing here?
Right. Yeah. Right. We've been here beating ourselves up in the FX market.
It was the only industry that would take us.
Right. That's it. Bunch of derelicts. Okay. Hey, you guys. Have great luck today with ECB. His conference is going to be very interesting, and I've got to turn up the elevator music now. Okay. Get on with this and get on with my trade day. So you guys have a great day. And hey, for those of you that enjoy this free webinar every single day, you don't have to be a customer of ForexAnalytix, but please, to show your support, please vote for Steve showed it, the Forex Best Awards for 2018.
I'm even gonna put the link here, and as you see, we are down at the category Best New Contributor.
Thank you guys very much.
Oh, and I forgot to tell you guys, I have Jared Kushner on the case, so he's got some bots out there working for us.
Thanks, guys. Have a great trading day. Sorry, the music's off. Meeting is starting. Talk to you guys soon.
Okay, bye, Blake. Good luck, mate.
Hi, Steve. So
hey,
Jared knows, he made a few phone calls, so we're going to have plenty of bots on all social media to talk about how wonderful they are to win.
Oh, yeah.
Right? But
the era of technology, right?
And we'll have the most votes ever in the history of the world for Best New Contributor.
Yeah, 1 billion votes with 7 billion.
We're going to win. Let me just say this, buddy. We're going to win bigly.
Because if you are to win, you should only do it like this, right?
Yeah.
Okay.
So, Steve, we're getting close to that Dixie number.
Yes, we actually almost touched it at the lows of the day. By the way, Stelios is with us. Obviously, I cannot be showing, charts and whatever is going to start after the press conference, and at the same time be hearing what Draghi is going to be saying. So Stelios is going to be listening in to Draghi, and he's going to be giving us whatever commentary, because let's be honest, nobody should have expected anything really from the statement, right? But the presser and the Q&A, and the way Draghi might answer some questions, or the way he might put some of the issues, will show to the market, how dovish, hawkish, neutral, or whatever.
Remember that press conference? Someone threw confetti all over him.
Do you remember the lady that actually?
Yeah.
Huh?
Yeah, that was...
Do you remember the lady that
who jumped on his desk? You
yeah.
That? He had this surprised look on his face.
Look, any central banker that's afraid of getting hurt by confetti, it's going to be tough for him to be a hawk.
Yeah. By the way, we have some Canadian and US data in 5 seconds, so that's out there as well.
That's true. So let's monitor 1 second the USD CAD, and
Oh, Canadian data is strong. Core retail sales higher than expected, and the US data is kind of no deal, nothing.
Yeah, retail sales versus Stelio. Are you sure? I see Canada November retail sales 0.2 versus 0.8.
Yeah, but core retail sales is much higher. So it's
the
depends
core,
on
yeah, I
what
haven't seen the print yet.
depends on what you think is more important. You know, it's
US weekly jobless claims came as expected. I mean, 233 versus 235. I mean, this is non-existent deviation. So US data came as expected, more or less. Okay,
Yeah.
cool. So by the way, speaking of Canadian data and the Canadian dollar, I think that the Canadian dollar is should at least unfold a little bit more from here, because no matter how you choose to see this, this was a triangle getting broken to the downside. So even I think we should at least test the 78.6 here. I know that Greg is still believes in the upside, and you know, I don't want to go against how he says things, because he's more often right than wrong. But you know, I believed back then that if we break the range here, you know, we're going to extend. I also believe that if this triangle breaks to the downside, we're also going to extend. Personally, I still don't see any technical evidence that the USD CAD doesn't want to go to new lows directly from here. Even the RSI, if you see here, that was showing a little bit of a divergence, this one is breaking to the downside as well. So, you know, as far as I can see from a technical perspective, the USD CAD still looks good to the downside. Now, having to do with the DXY that you mentioned before, Dale, the DXY almost at the lows of the day touched, you know, the upper part of this confluence of supports. It's actually a triple confluence of supports, because I haven't marked it on the daily, but I'm going to show it to you on the weekly. If you see on the daily, this is the 127% extension of this move. It's also the 61.8% extension, retracement of, let me draw again, of this move, right? From the lows there to this move. Okay, and if we go to the weekly, you will also see.
Oh yeah, that line that came off.
Yeah, I wouldn't judge it as a very important.
Yeah, maybe we get.
I wouldn't judge.
I don't know. Maybe
yeah,
we get.
Maybe. I don't judge. I don't judge it as a very important, like, technical line. The only reason I give a little bit more importance to it is because it coincides exactly with what we saw from the other two confluences that I showed you. Okay, so
maybe it's a second drive, Steve, and we get some type of bounce from here and then take it down one more time. And you know, it's starting to look, if you draw a line off where you have the highs of the dollar up there on your weekly,
here,
it's starting to look like a wedge to me. So, you know, if you extend it out.
Yeah, I understand what you mean, that if I extend, for example, this
or a triangle or something. So
this can be a wedge and find support here and rebound from here. Yes, sure. I mean, that can be the case, but, and you know, even if we look at it from this perspective, this is the 6th week in a row that DXY is being sold, like, you know, without even taking a breather. So at some point, and why not from here, that we have confluence of supports, we might see. Stelio, Draghi started, right?
At least some stabilization.
Yes, the stuff he's saying is exactly like before. There's nothing new. So I mean, I can go over some of the headlines.
Yeah, go ahead, tell us.
Yeah, basically, they're saying that rates are going to stay where they are until way past the end of the QE, which they hope to finish. I think it's September of this year. He did actually just say that they stand ready to increase QE if needed, if they think it's not enough. So
that's a joke.
Yeah, I know. But everything else is really exactly like last time. So nothing.
I don't think there is any market participant that actually believes that. Yeah, okay, but let's see. I think the first few questions might might get some useful information. So far, the euro has been quite stable since before we started. Actually, now it's moving a little bit lower. I don't know if he said something specific, but anyhow, speaking about the euro, I had the target here drawn since a long time ago. There's 161.8 from this last correction lower at 124.26. So far today, we seem to be respecting it, but it's extremely early. If we actually break above this level, in my opinion, there is not really any other technical level between here and the 61.8 of the move lower, which comes at 126, 125.98 to be very exact. So in my opinion, if we actually manage to close above this area today, then 126 should be coming rather soon. And from there, we might see like a deeper correction. This was, by the way, this was a triangle. For the triangle to break to the upside was more probable than not. Alternatively, we had said worst case scenario, it could have broken to the downside and come retest either this area, the breakout area, or that.
Okay, well, triangles are usually fours, right, Steve? So if we're coming out of here, this could be a terminal thrust.
Yeah, okay, but this can also be viewed as a bull flag, so it could have been a two.
It's triangle.
So bottom line.
Flag with the bottom part cut off. Who flies a flag like that?
or a pennant, you can see.
Unless you're in a battle, unless you're in a war zone, that's not what flags look like. All right, buddy.
Okay. Although, if we zoom in, you can see this is a pennant, most likely than not, right? I mean, pennants are triangles having to do with, speaking geometry, but whatever. Anyhow, bottom line, if we actually...
Didn't Greeks invent geometry?
Yes.
I knew it.
So bottom line, if we close above here, I think 126 is coming, and it might be coming sooner than people might believe. To get an idea of what we're saying, just think of the pound. Who could have thought that when we broke out from this confluence of resistances up here, because this was a triple confluence of resistances, that pound could have accelerated in this impressive manner, and yet it did, right? So as you understand, just by saying this and considering that if the market believes that ECB's statement today and whatever Draghi says are not enough to deter the market from thinking that, yes, sure, the path of least resistance is still higher for the euro, a move from here to 126 can easily end up being a 1 or 2 day move, right? So by the end of the week, by the end of tomorrow's trading day, under current circumstances with the dollar getting beaten so badly every single day, it's an achievable target within much less time than somebody would think. Now, as we said the other day, obviously this is a strong confluence of support, so that might act nicely to create some reaction for the dollar. But on the other hand, keep in mind that so far this year, and we're almost coming to the end of the first month of the year, we have literally seen only one-way moves, and one-way moves with extreme momentum. There are two things that are certain. One, this momentum and this kind of moves cannot extend for much longer. They're completely unsustainable. But two, that doesn't mean that they have to end today. They might, stop doing what they're doing in a week from now, or in 10 days from now, or in 3 days from now. And as far as the momentum is what it is, even 1 more week or 3 more days or whatever can cover some distance. I mean, some considerable distance. Anyhow, the euro is now at the highs of the day and pressing as we speak. Stelio, has Draghi said anything, or just the fact that? Yeah.
The interesting thing he said was that euro currency volatility must be monitored, and it can be a source of uncertainty. What he actually meant was strength, because of euro vol is going down. So
yeah, of course.
So he mentioned the FX rate. So that's something that people, as soon as he did that, the euro dipped a bit, and then it just keeps going now higher.
Yeah, you know why? Because at the beginning there was a mention about the euro, but then the market judged, from what you're telling me, at least that's how I take it, that for the time being, the intention to do anything more than just mention it is absent.
Yeah,
because the statement you're telling me is very weak, right?
Yeah, he can't even say it. Yeah, he can't even say it properly, right? He said the wrong thing. But the other thing he did say, and reiterated again, was that he was talking about the Eurozone economy and growth, and it was all positive. So it's like everything is going okay.
Have been becoming better. Yeah.
Yeah, and it's like everything's going okay. He talked about inflation. He's confident that it's going to converge now to target. So everything is fine. But then he tries to talk down the euro. It doesn't make any sense, So.
No, it doesn't work. It doesn't work like that. Obviously, he can't. He's a smart guy. I don't even think he thinks that can actually work. I mean, you can't first talk up everything that constitutes an economy, the Eurozone economy, and then think that by making a weak statement that has to do with the euro, the market is going to care about it. Obviously it doesn't. We can say this. And I said yesterday, very early in the day, when the euro was very much underperforming the cable, I said that, listen, if tomorrow the ECB does not throw the sink on talking down the euro and manage to do it in a successful way, the euro has some catching up to do with the recent cable move. So honestly, I don't find surprising the fact that we're pushing towards 126 at all. And I really, as I said before, I really don't find it hard to even see 126 print by tomorrow at the end of the day. Okay, obviously the DXY being heavily weighed against the euro, like 57%, is at the lows of the day already, and soon it's going to be entering the confluence zone, which its average is around 88.50. We should see if we get some kind of a reaction from there. But so far, even if you see the dollar's momentum, let me draw it here. You see the move lower seems to be in a phase that it's actually accelerating, right? Just if you see the angle, we're now literally going vertically lower. Okay, and this shows to me some kind of an impulse, obviously, here. There we go. Stelio, anything new from Draghi?
Nothing, man. I think
now we're at the numbers.
Yeah, we need to wait for the Q&A now.
Okay. Okay, so he said what he wanted to say, and now we'll see what he's going to be asked. Okay, good. Let's go through some questions, and we will be monitoring Stelio. If he answers to some question and gives some new information, let us know.
Will do, man. Will do.
Craig talks here about a butterfly. Oh, the one he was asking.
Steve, dollar index at these new lows getting close to targets. RSI is above
this butterfly formation, right? Okay. Say again. Sorry, Dale. Say again.
The dollar index low getting close to our numbers. On
yeah,
the 1
close.
hour only, it's a non-confirmation. So if you like to hear the ice crack, you might want to put a small position on between here and what were the numbers, 65 to 55, something like that. But this is the first time the hourly has not confirmed all the way down. So just saying.
Although, to be honest, I really don't see what can stop the dollar on a Thursday afternoon from going lower. I mean,
it could be a process. I mean, this could be dry too.
Obviously.
But on the hourly, I'm just pointing it out. It may not be a reason to be long when you start getting non-confirmations to reverse, but it is a reason to consider when lows are not being confirmed to cover short positions. And I rest my case.
Oh, yeah, there's no question that,
So,
you know,
I know
if
there's still people short the dollar, I'd be booking it.
yeah, I would definitely be booking, you know, some. Yesterday I booked my USD MXN, for example. You know, that was a fast move lower, a fast profit there. You know, a good opportunity for me to, you know, to get out of my losses from the Aussie and now see what I'm going to do with the gold trade that I have remaining. So, by the way, the pound almost touched today the 78.6 from the pre-Brexit high, almost. Okay, so that was the next target. Just look how fast things are coming. Yesterday, we were talking about the 161.8 at 140.47, and you know, I said that the next target, in my opinion, is 143.55, which is the 78.6. Just imagine, that was like 300 pips higher, and like, you know, 24 hours later, we're just a breather away from that. I mean, these moves have been literally insane. Just look at the pound. The cable has appreciated 6.5% in 10 trading days. I mean, these are so rare moves for currency pairs, because we're not talking about, like, you know, the ZAR, you know, the South African rand or the rupee or whatever. We're talking about, you know, theoretically speaking, two out of the three most liquid and broad-based traded currencies on the planet. 6.5% move within 10 trading days is a huge move for an FX pair, especially, you know, for one of the popular ones that, you know, usually, you know, the volatility is rather subdued. So, you know, these moves are, as I said before, are unsustainable in the medium term. I mean, obviously they show how much, you know, the dollar is weak at the moment, but, you know, this pace of appreciation, etc., or depreciation of the dollar and appreciation of stocks is unsustainable. The sentiment indexes as well, because somebody mentioned it before, are hitting extremes almost in everything that is being monitored, right? So, for example,
I think both indices and the dollar turn together if they turn. Okay.
Yeah, I mean, EuroFX DSI was at 90 yesterday. British pound at 94. Crude at 96. I mean, readings like 96, like we had the other day on this. The other day we had 96 for S&P and 97 for Nasdaq. Usually you don't see readings above 90 or below 10. And lately, I have been constantly seeing numbers above 90 and below 10 all over the board in the DSI. Dollar index DSI 8 at 8. Gold DSI at 91. Platinum DSI at 94. Palladium at 90. I've never seen so many extreme numbers. CRB index at 90. Volatility index at 10. Yeah, and more extremes here, I see. Just to give you an idea, anything above 80 and below 20 is considered more or less, you know, to entering the territory of extreme. And I just read you like half the list is now things that are like trading above 90 or below 10. Okay, let's have a look at gold. Good morning. Sorry, what about the crude oil? Yeah, sure, let's have a look at all of them. Here is crude. Crude is about to hit the next objective, which is the 50% fib of the large move lower at 66.87. It comes here. You can see it there. You see, so we're approaching the 50% after pushing out of this triangle. Likely, this is the final thrust before a deeper correction lower. As I said a few days ago, I said that I was looking for a high, but then I said while we were still here, I said that, listen, be careful. I told you that I'm looking for a high in crude because I see I see it being overextended and sentiment being very extreme, etc. But I think that we have to push higher once again first, because this price action is definitely a bullish consolidation. And as you see, we are pushing higher from here. But I would caution again, because now we've pushed higher from here, so we've satisfied you know, the minimum expectations of one more thrust higher. We are approaching the 50% fib. Sentiment is extreme. We have RSI divergence, as you see here. There it is. There we go. RSI divergence here, as we had here. So, you know, once again, now I'll have my eyes open for a move lower. And by saying a move lower, as I've said, you'd better wait for confirmation, because here we had one nice day, a reversal, but, you know, I didn't go short, because when something is in such a strong uptrend, you know, it's a good idea if you wait for more confirmation. And then the next few days showed that, you know, the oil had no intention of, actually, crude had no intention of rolling over. That was purely consolidated price action. So in that sense, you know, you need to watch for a reversal and confirmation, because if that happens, trust me, there is, even for a simple corrective move, there is a lot of potential for a downside. I mean, easily crude can come down to retest this 59 breakout area, even 55, and still be in a very nice uptrend, right? So you should be particularly careful. Don't jump the gun. If we get a reversal and a nice follow through, there will still be a decent amount of dollars to be made to the downside. More or less, actually, I view it the same way. The same thing applies with gold. I was looking for a reversal at gold. That daily candle there was amazing. It gave me the opportunity to offload half of it because I knew it was a counter trend at cost. But then this was obviously a triangle. We pushed higher once again. We even posted a new high from there. But I'm again looking for a reversal somewhere here. Okay. So it doesn't mean that it has to manifest, but what I'm trying to say is that everything against the dollar currently is extremely overextended, and I think that sooner rather than later we will have to see some moves unfold. So it depends on your appetite for taking risks, on your ability to time reversals, or your willingness. But I'm going to tell you something. Blake said it yesterday as well. You're either involved in these moves, in which case I would really advise that you start taking some profits, or you're not involved in these moves, in which case you should wait for pullbacks if you want to align yourself with the trend. But really, for example, buying gold up here after a straight up move from 1236 up to 1360, or buying crude up here, I mean, you had opportunities that crude was really undervalued. We had been riding this trend higher with crude, and we've made some good analysis here. We were looking higher until actually 63. So starting 63, we started looking for opportunities to be short. Haven't been short yet because I've seen no opportunity, because really, you had your opportunity. Crude was hitting 26. Now it's at 65, sorry. So after moving, like after appreciating by 2.5 times, you know, this is the time to be looking for at least a counter trend move before it can even resume to the upside, and not the time to be buying crude, right? Same applies with the rest. So, you know, as I said, you're either involved with these moves and you're doing good. Otherwise, I suggest you just wait for pullbacks. By the way, Euro is testing 125 as we speak. So 125.98, as I said, is something that is easily achievable by tomorrow. Stelio, anything new from Draghi after all that time?
I think the bottom line is that he didn't say anything new. He just was not dovish like some participants expected. That's
not being dovish is more than enough at the moment.
Yeah, Yeah. So he didn't say anything groundbreaking, but he didn't say anything dovish. So that's what the market took away and is flying.
Yeah. As I said yesterday, as long as they didn't come out extremely dovish, I really thought that the euro is going to do some catching up to the cable. And speaking of that,
And we're going to get that third drive to a top in Aussies coming up, being dragged up by European currency. So
yeah, just look at where euro pound found support, right? It's a triple confluence here. It's this low that we had. It's this descending channels support. It's also the 61.8 from that last move higher. So euro pound is putting a hammer today at current levels. Bottom line, be careful here. If you were short, you did well. I still believe that there should be more downside coming here from purely from a technical perspective, but obviously this is not the place to be short. There is no risk-reward ratio, right? Reward to risk ratio to be short here. It makes no sense. Where would you put your stop? So be careful here as well. I mean, Blake, for example, was short here. He took some profits yesterday. He left a little bit on the table. As a good trader, it's always preferable to leave some on the table than lose it back to the market, right? And, you know, I think that was a good trade, but once again, as I said, triple confluence of supports here. If we break below it, fine. But, you know, a rebound from here is a possibility, a decent possibility. Let's have a look at Euro-Yen as well. Euro-Yen, honestly, this looks like another triangle to me, another consolidation. Logic says that this one is gonna also make at least one more move higher, right? That's how it looks. There it is. Let's have a look at the other euro crosses as well. EURUSD. Can even view this as a head and shoulders formation, which is about to break. There it is. Shoulder, head, shoulder, currently at neckline, right? A break above there will add fuel. As you see, we had marked here when we were testing this zone. I said that if this thing wants to be bullish, it has to rebound from here. It did. So we're currently testing the neckline of this inverted head and shoulders. Pay attention to it, because I remind you, there is absolutely no question that the trend remains higher. Higher lows, constant higher lows, as you see. Right? So far, the sequence of higher lows has not been broken. And this is the most basic indication of a trend. A trend line like this one that actually broke to the downside is very useful and nice. Many times trend lines do define, but even getting the break below the trend line, you know, I never said that now it's bearish, you should look lower, simply because the basic rule for a trend is if it's an uptrend, seeing higher lows. If it's a downtrend, seeing lower highs. And that was never invalidated in this case. Euro Kiwi. Currently at resistance, more or less. There we go.
Just want to let you know Jane is in the house.
Okay. Sorry for not covering many of your questions today, but you know, we had to cover the ECB, etc. So tomorrow, with any questions for the rest of you that are ForexAnalytix members, we'll see you in the chat room, of course, exchanging opinions almost all day long. Actually, we even have people, you know, in Asia, you know, many of our clients. So, you know, I think it's a great opportunity for you to try it out for $1. And as Blake said before, if you're kind enough, I've put the link there. You can go ahead and vote for us in the FX Trade Awards. We are in the category of Best New Contributor here. Also keep in mind that our Gregor Horvat is in the Best Buy Side Analyst Contributor here as well. I honestly, seriously believe that I don't know every single person participating there. Besides Gregor, I know more than half of them. But Grega is an amazing guy and an amazing analyst at what he does. I think, you know, we would be honored if you gave us your vote. Okay, thank you very much, Dale. Enjoy the interview.
I'm sure glad you didn't go into politics, buddy. All right. Okay, thank you, Steve. As usual, Stel, great coverage of the ECB. I'm sure Blake's knocking it out of the park. Guys, stand by for an excellent interview with Airplane Jane. Jane, welcome to our community. I'm going to make you the presenter here. I have your watch list up in case you're not going to screen share it. I have it, but I'm looking forward to hearing your voice, and you can screen share if you like. There it is. Hello, Jane. You can tell she's a pilot. Look at that setup. So you just have to enable your mic. Let's see if your mic is enabled. Yeah, your mic is enabled here. So that's what we're missing is the audio. You'll see it. I'm not sure if you enabled your mic. It's okay though. As a trader, I've learned to be patient.
She seems unmuted.
Yeah, she is unmuted. I don't think.
But now went offline. I'm guessing she's trying to log back in.
Okay.
Try relogging. Okay, we can go through a few of the questions until she logs back, I guess. Let me see what we have. Because we had a lot. Pound Aussie and Pound Kiwi. Sure. Let's have a look at it. Just let me know when she's back, Dale.
I will, buddy.
Okay. Okay, here it is. Euro flying, actually. Euro is actually going to tag the 61.8 as it seems today. We are currently like 50 pips below it. We're pushing 125.40. Pound, as we speak, is also accelerating higher. It's like just a few pips from testing the 78.6, like, you know, 10 pips or so. 20 pips now that it fell back a little bit. Let's have a look at Pound Aussie and Pound Kiwi. Pound Aussie, we showed that yesterday as well on the 4-hour chart. That was an inverted head and shoulders. We came back, we retested it. And, you know, it's accelerating higher.
Tomorrow, Susha. I believe she's back, but I have to make her the presenter again, Steve.
Sure. Is she back for sure?
Why don't you make her the presenter from your thing here?
Let me see. Jane, let me look for her. There she is. You want me to make her make presenter? Yes. Okay.
Hi guys, can you hear me?
Yes, we can hear you. Welcome.
Perfect, awesome.
I know that, see, you're a trader, you know, because people say the secret, they have the secret to trading, and the secret is perseverance and persistence, and you weren't going to give up getting online to talk to us today. I really appreciate you being here with our community, and nice to meet you.
Of course, it's my pleasure. I'm always happy to help other traders.
Okay, so I just want to start with, you know, I tell people not to trade while they're driving if they, you know, all the phone apps and everything. I say at least pull over if you're going to make a trade. So I want to ask you if you ever trade being a pilot when you're flying? And more importantly, does it affect the altitude depending on how the trade's going?
Honestly, I have not been piloting myself probably in more than 10 years. I got my license when I was back in college, which now is 21 years ago. And I am married to a pilot. So I travel mostly commercial now instead of private aviation. And with 2 little kids, don't really have the time to keep up the hobby of flying.
All right, well, 10 years ago, maybe you weren't trading. So let's get back to the beginning of your journey and how you became involved in the markets and started trading for yourself. How long ago was that? And did you have influences or mentors or books that helped you along the way?
For sure, Dale. Well, actually, I started day trading about 2 years ago this February. But prior to that, I'd grown up in a family that had long-term investing. You know, every morning my dad would read the Wall Street Journal at our kitchen table. And I got curious when I was a little kid. I'm like, what is this? You know, what is the beta? And what's this high and the low? So I was learning about it as a little kid, but I didn't really grab the concept of it. And then in 2000, I went and I worked as a registered assistant at Smith Barney in Atlanta at the WorldCom office. And I got my Series 7 there, and I saw the devastation that happened with WorldCom when people took out money against their options to exercise to sell the stock, and then the stock dropped. And
like what people just did with Bitcoin, borrowing money to buy Bitcoin at 18,000.
Exactly. And I saw the devastation and I thought, you know what, this is great. Like, I love it, but I don't really want to deal with other people's money because I saw what had happened to them. So I went another path. I went to culinary school. I've done all sorts of different things, and I ran my own wholesale pastry business. And then slowly but surely came back to it after having our first daughter. My husband had said, well, hey, you know what, honey, I really wanted to be present, to be home for the kids. And well, one child at that time. And I thought, I just failed my French exam up here. I'm up in Quebec, and I'd done real estate before I immigrated to Canada. And I thought, well, I'm going to do real estate. And I passed my real estate exam, no problem. And then I took my French exam because you have to have French and be bilingual up here. And my first daughter had health issues, so I didn't have the time to really put in my studies full force. I was taking care of her, and I only got a 60 when I needed a 70, which is now a blessing in disguise, because really I did some soul searching, and my husband had made a recommendation saying, hey, Jane, you know, you had an amazing value trade where you took 25,000 and turned it into 250,000 in 9 months. Why don't you check out trading? And I thought, you know, you're right. I really do enjoy it, but I don't want to be more proactive. I want to get into it day to day, and I want to be looking at it every day. I don't want to just make a trade and just sit on it for 9 months and wait to see what the outcome is. And so I started doing research online.
No, you only do that to have children.
Yeah, exactly. So I started to do research online, and I came across Timothy Sykes.
Okay.
And my husband was really skeptical at first. He's like, this is almost too good to be true. What are you talking about? These returns are ridiculous. Like, there's no way that this is true. And so I did further research, and then I actually joined his millionaire trading program. I was like, I have the capacity and I have the dedication to make this happen. And so I started studying, like I said, 2 years ago, February 2015, when our first was 6 months old. And actually 3 years now. Yeah, 3 years now.
Okay.
2014. And right off the bat, did not follow rules. I blew through a $6,000 account. Why? Because I was putting in an order. I'd buy something like a penny stock that was shooting up, and I had my daughter that was sleeping upstairs, and so I would put in a stop limit order, but I wouldn't leave enough space between my stop and the limit, so it would blow right past my order. I'd come back down after changing a diaper, boom, down, you know, hundreds of dollars, and just blew through that account without following any rules. So I thought, okay.
Every pro has blown an account.
Exactly. Thankfully, it was $6,000. And then I thought, okay, really, I need to, if I want to make this a profession, I need to get serious. I need to be realistic and say, I need to dedicate time to this so that I can really learn it. And I put it aside for 6 months until my little one was at daycare. That was September. And I started studying then, and I started studying the market at open. And I started being that stock nerd that puts everything into a spreadsheet, tracking what the stocks are doing, it 3 days after they gap down or gap up, because I was really interested in gapping stocks, because obviously you're going to have a catalyst there and you're going to have the volume. And so you're going to be able to see action in those stocks through the day, which every day trader knows you need liquidity, right? Because you need to be able to get in and out. And so you want to have high volume. So you're looking for stocks like this screen
that
right
are
here.
really, when they gap higher or lower, they're really giving you a message.
Right, exactly. So like these stocks right here, which this is my trade ideas screen that I look at pre-market, where it's constantly analyzing, okay, so CFMS is the biggest loser right now, and for percentage-wise for the gap, but you actually want to talk about ones that are gapping down. Well, we've got Union Pacific as the biggest dollar gapper down, so you can change it accordingly. So I'm watching the gappers throughout.
You trade both the long and short side, Jane?
Correct. Yeah, I'm not biased. I do prefer. Well, as many people will say, when you're going short, you'll see that it drops down 3 times as fast as potential long value trade, right? Because you're going to have the stops that start executing. If it's dropped down 20%, you're going to see that it's the big money houses that hold it in mutual funds and everything like that will typically dump it when it drops 20%. So you'll have an even larger momentum going with volume. And then you also have just panic selling, and you have shorters getting it. So you have all this volume on the downside selling it until it will reach a support, and then it starts to find a bottom and come back up.
You know, you sound like a very quick study. You know, most people that I talk to, before they make breakthroughs and they become consistent in making a living off the market, usually it's like a 4-year period, almost like going to college for an undergrad degree. Sounds like you did it in a shorter period of time. When did you have your breakthrough after you started to where you really were consistent? Everyone has losing days, but you know, your hit rate improved and you're really starting to make money in the market. How long did it take?
For sure. Well, like I said, I started February of 2015, blew through that account. September of 2015, started paper trading. November of 2015, I went to real money, small amounts, to build consistency and confidence. And then by January, the end of January 2016, I started to really become consistent, and I had the confidence behind me. And so that's when I started to position size up. And, you know, once I've pretty much been consistent since then. So it was really almost about a year, but it took about 6 months.
That's really a quick breakthrough. Do you credit what you learned from Timothy Sykes for that, or do you think most of the great results that you're getting now were self-taught?
Well, Timothy Sykes with his tools definitely taught me the basics in the beginning. And then I found what really worked for me was what I always like to say, everybody has to find their own fingerprint strategy. Because if you are going to trade, your risk tolerance is different from mine. Your time,
you know, the author of Market Wizards says that. I've interviewed Jack Schwager.
Yep.
And I said, what's the most important piece of advice you could give traders? And he said, quote unquote, find a style that fits your personality.
110%. And actually, after reading his book, it inspired me to write my book, which is about predominantly female day traders from around the world.
Wow.
Which is, yeah, it's hashtag FMJ, which everybody wants to say what to their job, and trust, transition, and trade, right? So you have to trust yourself when you're going into it, and you have to transition slowly, and then you can go full-time into trading. So it really inspired me, because that was a book I was looking for as a woman breaking into the trading industry, because it's predominantly male. And so I thought, I want to create something that I can help all traders, but also women traders to feel comfortable to get into it, because I feel like there's a stigma that it's a male-dominated field, so why would a woman get into it? Which is just, it's a glass ceiling mentality. There's no reason, because it's always the person.
I've interviewed many that have shattered that ceiling.
Yeah, for sure. And
you're another one, and you're helping people. Could I just ask you for a few names of who you put in your book as female
yeah,
traders?
for sure. I've got Stephanie Kammerman. I have Stephanie Burke. I also have Latoya Smith. I have Jordan, I forget Jordan's last name. She's Travel Light. She travels around the world, and she's about 25 years old. I also have, let's see, I've got 7. I'm trying to think of all of them. I forgot it. Oh, wait, you know what? I got my book right here.
Well, but when you write your second edition, I have some suggestions for you. But
for sure.
I think it's great. So that's kind of like your mission or your ministry, is to help women, especially that might be in the same position with maybe a child that they have to be home, and this is something that they can do while they are at home. So I commend you on that mission, and looks like you've shattered the ceiling too. So great work.
Thank you. Yeah, and actually, Trade Ideas has asked me to speak a couple times as a woman in the industry, and actually, after doing 2 seminars with them, it inspired me to set up one myself in June. So I'm actually hosting a seminar in Orlando in June about, which it has predominantly female traders speaking as well, to try to have that one-on-one capacity for women and men as well. But it's a different viewpoint. I think women are more nurturing and caring and educating about stocks. There's less ego there.
Okay. Maybe you're right.
Not every man is like that, but I think predominantly, there's more testosterone, so there's more of a thought process. I have to beat the market.
Okay, well then men have to be over 50 years old, and their T count has to be down to be more compassionate and nurturing.
Exactly.
Okay, so I qualify. So anyway, would you consider, do you look at the fundamental side of what's happening in the market? I know a lot of people say, why pay attention to fundamentals? The charts tell you everything. They're discounting mechanisms. But if you're trading stocks, you have to be aware of earnings and, certain, whether or not they're going to do a secondary offering to dilute. So what would you say your mix is between knowing the fundamentals of a company you trade along with the technicals?
Well, definitely, I will look at that as far as that morning. I'll look at the news of the stock that morning to see what the issue is. Like I had one on my watch list this morning, and it had just had an offering, so I took it off my long because the offering was at 11.50 and the stock itself was at 12.50. So it's going to drop down more than likely. So I'm not going to recommend it as a long. A lot of times I've got my watch list right here, so you can see a lot of times for my longs, I'll look more at the lower float, because like I said, the shorts will drop when you have that freight train of momentum going down. It's really hard to stop a larger float stock. But if you have, in going up, like I said before, it'll go up 3 times. Well, you've got this right here. You've got the lower float stocks. So when you start to have those shorts that are getting squeezed, you have the triple the momentum on the long side as well. Yeah. So I look at the lower floats for the longs and the higher floats for the shorts. And I will look at the news that morning. But a lot of times I do longer term swing value trading, like in my 401k, where I'm not monitoring it every day that much. I mean, I'll check on it maybe once a week, but those are longer picks. Like I have NVAX, which is one of my long-term picks, which it's
Do you follow Tesla, Jane?
I do follow Tesla some, yeah.
All right, because maybe we could talk about this, because I noticed with the NASDAQ going parabolic that Tesla hasn't made a new high in quite some time. It almost looks like it's a potential failing rally. And I know it's a darling stock. People just love the, the label of Tesla. The cars are beautiful. I'm wondering what your view might be on this particular issue here.
Tesla, I'm looking at the 1 year chart here too, it looks like it doesn't have a nice double top on it.
Yeah.
Where
and this rally looks to be, you know, with the NASDAQ, I'll look at it and say, wow, you know what? The NASDAQ's blowing off parabolically and making new highs, and yet Tesla, one of the darlings of the NASDAQ, is not making a new high with the averages. And to me, that's a sign of relative weakness. Do you see that?
Well, I also think that Tesla is going against the government in the States, right? Because the government in the States is really long biased for oil. So Tesla is competing against all of the, because I'm from Washington, D.C., right? So all the politics does
what
play.
A pearl.
Yeah.
Yeah,
So,
I mean, you know, it became pretty obvious with the tariffs on washers and solar panels, right?
Exactly.
Okay.
So they're doing everything to see that solar, or excuse me, not solar, but electric cars will not fail, but they're going to be cut back. They're not going to advance as quickly as the government would like. The government is, in my opinion, going to regulate how quickly they will let them grow. So the same thing happened with the catalytic converter with ethanol in cars.
You go that far back. Okay, interesting.
Yeah, I know a family friend that was working on that, and they had the technology in the 80s, yet we just saw ethanol happen in cars maybe 10 years ago. Why? There was the political pressure to make it happen. So I think once actually 30 years ago in the 80s. So once the political pressure says, hey, we really need to go to electric, I think we're going to see it go up. And also it's not just Tesla that's electric, right? You have the Chevy Volt. Ford just came out with one. Toyota wants to come out with one. So it's just, they're the first in the marketplace in people's brains, which you always have 1 to 3 spots in someone's brain for marketing. But really, they're going to be fighting the government. Yes, it's gone up, you know, in the past year, almost $190, and it's still progressing with all the other things besides just electric cars with the solar panels, everything like that Elon Musk has going on. But it's going to be competing against the government, in my opinion. And it does look like a double top here, and it looks like it just failed resistance break at 360 as well. So it looks like it's going to sort of oscillate between 300 and 360, and in a channel right there with 60 until there's a definitive move one way or the other.
Okay, so someone in our community is saying, hi Jane, love watching your watch list videos. You also seem like such a sweet person. I'm also a female trader, getting a lot of inspiration from you. So let me ask you, and much love, let me ask you this. When you hear this from people, isn't it almost as good as a winning trade or even better?
Oh yeah, for sure. You know, when I hear how I've helped inspire and encourage other traders to keep it up, I always say be kind to yourself in the process, because there's not always going to be green, happy days. There's going to be a lot of struggles. And when I hear back from people, it's energy that fuels me to keep going. Because as a mom of 2, a lot of my free time I do dedicate to helping others break through that barrier that they have with themselves, just mentally, of keeping it up. You know, it can be really devastating if you have 5 days where all of your trades seem like they're going wrong. Well, if you've written them down and you've journaled them, then you can see, okay, when did you get in? When did you get out? What was your emotions behind it? Why did you get out? Was it fear, or was it, okay,
why did you get in? What was the contingency that got you in?
Exactly, a little bit of it all, so that you know and you can understand yourself, because it's you and the market. So you have to tackle yourself in trading and tackle yourself through the downsides as well as the upsides. You know, upsides are easy, but you also don't want to cut your winners too early. Why did you get out? Was it because you just had a target and that was it? Or you let the chart show you when to get out?
Yeah, first daylight syndrome.
Yeah.
Cut your profits short, let your losses run. Jane, you know, you've been involved in the most prolific bull market in history. If they called 2000 a bubble and 2007-8 a bubble, different reasons, .com, housing, if you look at the advance that we've had on a long-term chart, the magnitude of this rally dwarfs what happened in those previous two bubbles. So let me ask you this. You've really only seen a bull market, although individual stocks that you short, you've seen bear markets within an ongoing bull market. Do you, what will you be looking for to tell you that we might be close to some type of major correction in the market?
I'd say when I start to see multiple down days, I mean, you're seeing, really don't see a lot here. The SPY, you've got NASDAQ, you've got the Russell. So
Yeah.
you don't see it overall. You'll see that it's testing resistance, but it's not overall coming down. And to me, I do like shorting, and I will typically short or be more short biased on a daily basis than long because it goes down 3 times as fast. So I'm actually looking forward for that opportunity where there's more options to go short.
You want more binary trading.
Yeah. So,
Okay, well, okay, because you know a lot of people, you know, a rising tide lifts almost all boats. You know, so right now people feel like a genius if they're long spiders, right? But you know, you're going to have to become a little bit more professional when it's not a one-way street. I wanted to get that answer from you, and so you're going to be looking for negative action to tell you that the tone is changing. Why don't we do this now, Jane? You have a nice website. So besides being able to get a hold of you on Twitter at Jane_we, YUI, why don't you show your website and tell people the best way they could get a hold of you, and that you'll even let males contact you.
of course, of course. Oh, hold on. This gave me my, you don't want to see the back end side of it. Hold on.
Okay. And what a great interview, Jane. I'm so glad I reached out to you. Maybe you'll follow me on Twitter now.
Yeah, I already am. Okay, sorry. I have screens. I have 2 different screens, so it's like obscenely large.
Okay. Yeah. All right.
Okay. So cjanetrade.com, and I have at the bottom of all of my watch list everything. I actually don't have it on here, I don't think. Well, I have it somewhere. But you can follow me on Instagram, Miss Airplane Jane.
Okay.
Right there.
And I noticed that your monthly fee is very reasonable.
Oh yeah, for sure. Well,
what is it, like $20 a month?
Exactly, and you get 3 days free. So it's just, it's not, you know, it's about helping people in an efficient manner instead of where it's $1 a day, a trading day a month. And it's more to help people, because if you want to, and here I'll go ahead and I will, I'll pull it up for today. I'll show everybody what we have in store for today as a sample, because I like to go ahead and create tools in an efficient manner to help people. So I'll give them, what are the markets doing? They're all up today, pre-market. Click for the interview today. Here's my chart where I have the longs and the shorts. And the short float volume is the volume for the day prior if there's going to be a squeeze. And the volumes, so you know what you're dealing with for supply and demand of a stock. Then I have the charts, so you can see, should be able to.
We can see.
So then you can see, you get the visual as well to understand, okay, well, why is she looking at this? And what are these lines? It's the support and the resistance. Okay, so if I want to go long, maybe I'm getting
only bands, or are they moving on your charts? Bollinger Bands or moving averages?
I have the Bollinger Bands turned off right now. I have the moving averages. I like the 9 EMA and the 8 EMA. And really, on the 15-minute chart, when I see the 9 cross the 8, I tend to see dramatic movement in one way or the other.
Okay, interesting. Thanks for sharing that.
Yeah. So I try to make it a learning tool that's super, super affordable for everybody, because when I was getting in, and something else I have, the tools that I use, where you can see Profitly's free for that. You also have the free trading room with trade ideas. There's also trading.
I interviewed one of the principals at Trade Ideas.
Was it Dan or David? I'm good buddies with them.
David Arafat?
Sorry?
What's
David
David?
Yeah. Yes.
Okay, yes, I interviewed David. Okay, so you're associated with them too.
Yeah, they're actually they're going to sponsor the summit, which I'll pop up here really quickly. So it's going to be down in Florida, and they're a sponsor as well as TradingView. So TradingView is another great, which it looked like you were using as well.
Yeah, I use it.
So it looks like
if they want some FX coverage, tell David I'll fly down to Florida.
Sounds good. So I try to offer people a lot of free tools, free paper trading. TradingView has free paper trading as well as Thinkorswim and interactive brokers. So I try to give people the free tools as well so that they can break into it without a lot of expense and they can study without a lot of expense. Oh, market's open.
Okay, well, you know what? That's a segue for a wrap then, Jane. I know you probably have some things to do. You're one of the good guys in the business. I can tell after talking to someone for about 30 minutes, and your intentions, the seeds that you're planting, that you're sowing, are very good seeds. And you know, I know you're going to have a great harvest. I'm so glad that we had this chat today. And like it or not, you're now my trading warrior sister. So
awesome. Thank you, Dale.
Thank you for your time today, Jane, and good hunting, and let's get back together a little bit down the road, and maybe the tone will change, and we'll get a little bit more about it, see if I'm right about Tesla breaking down. And really, you have all the skills. So
thank you so much, Dale.
I'm not worried about you. Have a great 2018. And it's my hope that every lady that you help becomes as good as you.
Thank you, Dale. Thank you so much.
It was a pleasure.
Thank you for the opportunity to speak with you today. I really appreciate that.
All right, I had a great time. I hope you had some fun too, and good luck today, and very glad to meet you. Glad our paths crossed. Thank you, Jane.
Thank you, Dale. Have a great one.
You too. All right,
Bye-bye.
Faith, that's it. I thought that was a great interview. So if you're a stock trader, you know where to go now. So we'll be wrapping it up. Tomorrow I have Mark Newton from CNBC. Mark's going to be with us. And I'll see everyone tomorrow. Remember, don't just count your pips, count your blessings. See everyone tomorrow. See you in the chat room.